Hi there, my name is Brahim, welcome back to the channel, and we're going to look into ARC's price target for Tesla in 2022. We're going to look into ARC's price target for Tesla in 2025. Now, this came out by Tasha Keeney, CFA analyst, on March 19th, 2021, so basically 4 days ago. Last year, ARC estimated that in 2024, Tesla's share price would hit 7,000 per share, or 1,400 adjusted for its 5-to-1 stock split. Based on our updated research, we now estimate that it could approach 3,000 a share in 2025. 3,000 a share. To arrive at this forecast, ARC used a Monte Carlo model with 34 inputs. The high and the low forecast incorporating 40,000 possible simulations. 40,000. Our bull and bear price targets are the top and bottom quartile outcomes from the simulations as shown below. ARC predicts scenarios through expected, bear and bull. So this is like reality, this is worst case, and this is them smashing their expectations of expected. 2025, 3,000 a share expected, bear case 1,500 and bull case 4,000. Now 1,500 a share. Tesla's not there yet. Even then, that would be Tesla doubling its price. Let me double check what Tesla's stock price is right now. So Tesla stock price 670 on the dot, and if you look at pre-market right now, it's up by $80, 1.19%. They think it's going to go up by 2.5 times its current value. Expected, of course, is like 5 times almost, well, less than 5 times, and then bull case is a lot more. This projection is our base case for Tesla stock price in 2025. Based on the Monte Carlo analysis, we believe that there is a 25% probability that Tesla could be worth 1,500 per share or less in 2025. We believe that there is a 25% probability that Tesla could be worth $4,000 per share or more than 2025. 25% bear case. So you're looking at 50% and another 20%. So you have 75% that is going to hit 3,000 or more. 75% sure. I think that's a good amount to be sure that's going to hit 3,000. And even then, their worst ideal is only 1,500, which is still kind of good for the stock price. With no single bear and bull case from the 40,000 simulation, we have selected what we believe to be a plausible case for each one as shown below. So that says estimated values in bull and bear example cases 2020, example bear case 2025, example bull case 2025. Cars sold millions, 5 million, 10 million. Average selling price 45,000, 36,000. Electric vehicle revenues 234 billion, 367 billion. Insurance revenues 23 billion, 6 billion. Human driven ride hail revenue net billion, 42 billion, and of course this being not available, so 0. Autonomous ride hail revenue net billions, they put 0 here, and 327 billion. Electric vehicle gross margins, ex credits 40%, 25%. Total gross margin 43%, 50%. Total EBITDA 31%, 30%. Enterprise value 14 or 18. Market cap 1.5 billion or 4 billion. Share price 1,500 or 4,000. Free cash flow yield 5% or 4.2%. Then key assumptions for the bull and bear case examples reflected above. Example bear and bull. Using Wright's law, electric vehicle gross margins never exceed 40%, 25%. Capital efficiency gross capex per car 8,000, 6,000. Maximum annual production increase 65%, 90%. Percent of all Teslas on autonomous platforms in 2025, 0 and 60. Percent of cars sold in human driven ride hail 40%, 40%. So at least that number's the same. Key updates to our model: we pushed our forecast price targets forward 1 year to 2025, because before it was looking at 2024. We refined our estimates for Tesla's capital efficiency. We added Tesla insurance business to our model. We added assumptions for human-driven ride-hail service. We increased the profitability of Tesla's achieving full autonomous driving within 5 years. Talks a little bit about electric vehicles. Then it goes on to talk about their insurance. Electric vehicles. Since our 2024 analysis, we have increased our assumptions for Tesla capital efficiency. Previously, we estimated that Tesla would spend 11,000 to 16,000 per incremental unit of capacity in 2024. In 2019, Tesla spent $1.3 billion on capital expenditures, CAPEX, and produced 509,737 vehicles, an increase of 144,505 vehicles from the previous year, suggesting that its CAPEX per incremental vehicle produced was roughly 9.2 thousand. In 2020, Tesla spent 3.16 billion on CAPEX, putting capital efficiency in 2021 at $10,330, assuming a 60% increase in vehicle production. Note that the math probably overstates the capital required for incremental vehicle because a proportion of CAPEX is for long-dated products, like autonomous data centers and Tesla vertically integrated cell factory. At Battery Day, Tesla announced that it updated cell chemistry and manufacturing process would reduce investment costs by 75% over time. To give Tesla credit for what we believe is its superior capital efficiency, we lowered gross capital expenditure per car in our latest model. Given these updated systems, along with an additional year of growth added to our model, our forecast for Tesla's unit sales is between 5 and 10 million vehicles in 2025. Then it talks about its insurance, human-driven ride-hail, fully autonomous ride-hail service. Now, this is where it gets a bit interesting. ARC's estimate for Tesla's 2025 share price. So bear case, like it said, 1.5k, expected value 3k, and bull case we got 4,000. So essentially you got 50%, 25%, 75% is going to be over 3k, 25% is going to be 1.5. I think they're very bullish, of course, on the stock. They don't really feel that 1.5k is where it'll be in 5 years' time. Scenario mix within price target ranges shown above. So occurrence 100% down to 0% and likelihood 0 to 50%. So here's a chart, it shows a scenario mix within price target ranges. The biggest range is this blue range here. If you can look at that, the blue one's taking up majority of the space on the screen. And if you look at this one here, the bear case is very, very minimal. But it does have a 50% chance at one point, if you look at that. But regarding this, to me, bear case wise, it doesn't look very bearish. I think it's gonna realistically be between 3,000 and that 4,500 price range they have. Likelihood, you got Tesla's production doesn't exceed 4 million and does not meaningfully sell into a vertically integrated ride-hail nor deliver on robotaxi. Tesla produces more than 4 million vehicles but does not meaningfully sell into a vertically integrated ride-hail or deliver on robotaxi. Tesla incorporates vertically integrated ride-hail but does not deliver on robotaxi. Tesla delivers robotaxi, and you can see all those different opportunities. So it's looking very bullish. In many of the low-end cases we modeled, production constraints limit Tesla to fewer than 4 million units produced per year, while while technological and logistical bottlenecks prevent the launch of both human-driven and autonomous ride-hail networks as shown in grey. When production is not constrained, a human-driven ride-hail network increases the expected price target range, as shown in green. Less than 20% of Tesla vehicles sold into ride-hail in 2025, and Navy, 20% to 70% of Tesla vehicles sold into ride-hail in 2025. Finally, in purple, the high-end price targets incorporate the assumptions that Tesla launches a robotaxi service. In ARK's Tesla price target, please note the electric vehicle and robotaxi business lines generate roughly 40% and 50% of Tesla's expected market cap. The average value from our Monte Carlo simulation, respectively, in 2025 as shown below. And then it's got ARK's 2025 estimates for revenue by business line in our expected value case of 507 billion revenue. We got electric vehicle in green, robotaxi in shade of blue, human-driven ride-hail in a different shade of blue, and then assurance in a smaller shade of blue. EBITDA by business line in our expected value case, 176 billion EBITDA, and you got electric vehicles almost 50%, robotaxi about 40%, human-driven ride-hail, so that's like 8%, and then insurance is about 2%. Then market cap by business line in our expected value case, $3 trillion market cap. So right now, there's only a few companies that have passed the $1 trillion market cap. Microsoft, Apple, Amazon, Google, or its parent company, Alphabet, and then Saudi Aramco, the oil company in Saudi Arabia. This means it'll be one of the few companies to surpass the $1 trillion mark. Of course, it'd be more impressive if it hit it now, but in 5 years' time, it's still impressive. $1 trillion. Are still more than some countries' entire capital. Conclusion. Given the updates outlined in this blog, 2025's price target for Tesla is $3,000. ARK's bear and bull case suggest that Tesla could be worth roughly $1,500 and $4,000 per share, respectively. We publish our model on GitHub and invite you to test your own assumptions and or craft visualizations from the simulation outputs for our assumptions. Then a few footnotes. So what we're getting from this analyst at ARK Invest, Tesla is going to 1,500 guaranteed from their bear case by 2025. From their bull case, 4,000 per share, and the market cap will be $3 trillion. And we have the expected. They expect it to go to 3,000. Of course, there's different variants that may make a difference to whether it hits that share price or it doesn't, but we will see. Let's see if Cathie Wood is right.